Welcome to TradeTheMBI.com. This is John. This report is for the 4th, and well, nice bounce off the highs. Once it got going, we were looking for the previous highs over here to get hit. And most of that was right before the end of the year. We had a little dip. Wasn't even enough to get to the green ABM on a daily standpoint. Reset the shakeout here with our little bit of short maneuver, but still reset. So once we started the year, boom, we popped above. And also, we popped above the negative 13.5 on the DOC, which is what I look for from a steel standpoint to be your new buyers moving in. And you had the spike at the same time with midterm. And now if we break above zero with the long-term buyers, this is going to go even further to get up past. I was right around this range for a target. We could even move now to the 28 range. Could be interesting to see. I think we're going to start to slow down here as a little bit of the exuberance. They were trying to capture new money that's coming in for the month, and plus people had to rotate into new positions. So that kind of, they got out, and then a little bit of a push forces them to pay a little extra to get back into something, and I think they're missing it, and they go for it. But you see beautiful breakout here from the NASDAQ. It had reset earlier and had been oversold with the midterm buyers and that. And never even got a full, complete reset from short-term buyers, but they just took off with it anyway. It's overbought, so likely it will fill back into this range, but that's normal when you have a breakout from new highs. Usually you pop above it, and then you come right back to them, and that sort of fills in the blank. The euro started to fade back a little bit. It's going to still have some problems. It's in a short territory now. Dollar's way oversold given what we know as far as economic numbers and that. Yes, there's still the question of whether or not inflation will pop up, but that's okay. It's always going to be lagging. And the fact that the Fed is going to take a little bit slower is going to be super good for the market, I think. But it may keep the euro slightly inflated because it gives justification where the Eurozone, a little more accurate in their reporting on details, says that they're in major inflation, which I can assure you is not true, but that's okay. They like to mix stuff up, even though it's relative because it doesn't really matter what the inflation is there. It's the fact that the U.S. is going to be slower in raising rates, which means that you don't have the need to move your euros into dollars to get return. So that's the nut of that one. TLT here, bonds again, going to be under slightly less pressure because if you're not having major, rate increase immediately, then we just had the December hike. If they're not going to do it immediately in March or whatever, then we may see this continue to hold at least where it should be actually falling with the rise in yield. But this is going to create some pressures. And you're seeing it now, but this is leading us into April-May range and suggesting that that's when, in the second quarter, we're going to start to see more inflation numbers that will be significant. Gold's already put it in there. We've got it priced pretty good here with the pop of the positive extremes. Just taking a break at this particular point. Though you do have the orange has just popped above, but notice the steel going straight down as an indication that short-term buyers have just held off for a brief bit. They need a little bit of a respite, but we are getting into pretty extreme overbought, so some consolidation to a little bit of retrace on that would not be out of the question, so don't be surprised at it, but still, long-term play, it's the right way to go. And look at this one, shrink it again for a couple of day reading. We had the pop, the dip down below here with the orange signal. We didn't get a complete retrace of the steel. It wasn't until a little bit later once we got right here before the 50%. Once the 50% broke on that move, then it just continued to cascade, and it's just been nonstop since then. And all the little short signals that we've got here have all come on resets in steel in significant fashion. But the critical element was that you didn't get a DOC spread until this one right over here, which actually led to the most dramatic decrease, which was literally just to the ABM green on a 5K. If that's the worst you've got going, it's a pretty strong move. And once you've got this kind of move through most of the day, typically you're going to get some softening up at the top of it, but you're usually going to finish at the highs of the day. It's typically what happens because you've got shorts trapped at this point, and that's usually how they just finish it out. So that's exactly what happened. just for the fun of it, we can go ahead and take a look at Bitcoin as it consolidated into the tighter range. But it's been producing some really nice short signals overall. Even the buys have been pretty clean, and particularly when you incorporate them with the Fibonacci, like the GAM showing up here right around 50%. It's a nice, I mean, doesn't seem like much, but when you're talking about going from 15,000 to 15,500, it's still a decent return. So it's very, very playable action, and it's been kind of nice. As always, though, I will update charts as necessary and continue to finalize some of the program adjustments. Looking pretty good. As always, trade well. Talk to you later.